As we step into 2025, Compass Wealth Conversations is proud to reintroduce Brendon McPoyle, a certified financial planner and a 5-star wealth manager. Our partnership has delivered exceptional financial planning conversations in the past 2 years. Our focus for 2025 is financial teamwork, using our professional network for the health, wealth, and happiness of all our clients. We've partnered with Brendon and his wealth management firm, Princeton Global. They help us deliver tailored solutions to help clients achieve their financial goals. From retirement planning and wealth management to tax efficiency, investment strategies, our combined expertise ensures every client's unique needs are met with precision and care. All right, Brendon, welcome to the show.
Thanks for having me, Murph. Appreciate it.
So we're in 2025. So let's just kind of look back at our relationship and how it started. It started about 2 years, right?
Yeah.
So started working together with your sister.
Yeah. That was great. Remember that? I was, you gave it a proposal and I threw it out.
I told her you would.
Yes, you did. And unfortunately, she never pointed out the notes that you had made for me to look at. But it worked out and you were persistent. I got to give you that. Like 6 months later, you came back. You're like, dude, seriously, we could do some work together. And, at that time, she had gotten a little nervous with the market volatility. Remember, she had just retired and she was nervous. And I'm like, hey, let's revisit that. And I think it worked out great. We did exactly what we've been doing. Like, we put some of our money in the insurance product to give her a guarantee. And then the rest of it, we put in an equity-based portfolio with Princeton. And, I think she's been very happy since.
Yeah. We used an Nexus 8-year product. So it gives her that safety, security, gives her that floor, right? Mm-hmm. Can't lose any principal, but when the market is up, you're going to participate in the market. In the last 2 years, the market's been up. So she participated in that game, and it gave her that comfortability about being invested in the market. Because at the time, she was just invested in her 401k at the time, right?
Well, yeah, we pulled it over to the IRA, but the fluctuations in the market, it just made her nervous.
Yeah.
And she was looking at it too much. So with the Nexus product, we were able to say, like, all right, this is set and forget it. For the time being, for a year. And then, we could play with the portfolios on my end.
And I kind of think that with dealing with your sister, it kind of gave us the blueprint for having to deal with other people, especially when it comes to the splits, right? Like a 70-30, 60-40. Yeah. We find people that are like 50-50 sometimes, and it doesn't always work out for what they're doing.
Well, it certainly opened my eyes to just different ways to handle investment strategies. You know what I mean? As you know, I'm an licensed insurance agent in Pennsylvania, but, it wasn't really my forte. So bringing you on board or, us combining forces, if you will, having your specialties, really opened my eyes to different things that we could do with our clients, just how we can manage their expectations a little bit better. So as you're saying, that led us down the path of saying like, hey, why don't we take their fixed income portion and put it into a guaranteed product? Because fixed income was garbage at the time. Remember, it was paying like 4%. Mm-hmm. So we're like, hey, why don't we put it in that into like an annuity product where we had that floor, we had the upside potential to get more, guaranteed though, and then for the rest of it, we could do that equity based through Princeton,
and we could use that guarantee whether it be some kind of income at some point. That fixed income could be long-term care at some point. We could use it for those dollars, or it's just really, hey, I want a guaranteed rate, like a multi-year guarantee. Like I want 4% for 4 years or whatever.
Yeah, and we could plan it out and say, like, that'd be fine. That's all you need. Why take that risk if you don't have to? I also like how, with our clients, we can show them kind of different distribution strategies, right? Mm-hmm. So as if we put, I don't know, say we have a 70-30 portfolio, we put 30% into say an equity indexed annuity. Mm-hmm. When the markets are doing well, we say, take your distributions from Princeton Global's bucket. That way, we're not messing up, the portfolio, and then when the market takes a dive, hey, maybe we pull from the equity index annuity because that has that fixed floor,
right?
And allows the equity portfolio to maintain, to grow, to get back to work.
Yeah, because if you've ever been to seminars where people have seen them, they're showing you when the market's down, you're minus 20%, at some point, right? It's been down 20%. Then you're taking your 10% off the top. Now you're down 30. And then you got to go back up. You got to wait for the market to come back up. And it's not always in a 1 year. It's not like it was in 2022 where it went down 30 and 3 months later you were back. 4 months later you were back.
Yeah.
Over time, I mean, in 2008, it took almost 6 years to get back to where it was, right?
Yes, it did.
So if we kind of use those distribution strategies that we're going to pull from the annuity when market's down, we're going to pull from the managed money when the market's up, it kind of gives you that balance, right?
Yep, absolutely. Absolutely. And I think it gives clients that kind of reassurance, like, hey, I know I have this bucket here. You know, even in the market, 2024, I mean, market was up 20%.
Yeah.
You know, I had clients that were like, I don't want to go through 2008 again. Yeah. I want to take my gains off the table. I know I still need to be invested, but I want to secure some of this. You know, maybe as a legacy. Who knows? I have some older clients, but take that portion and move it into an insurance product. Worked very well.
Yeah. I think it worked well for us last year.
Very well for some of the clients.
And it worked well for our clients.
That's what I mean. It works well for the clients and it makes them happy. It gives them that comfort.
Yeah.
And I mean, we should also touch on like just having our relationship. I think clients really appreciate the fact that they have two of us now. They have two professionals to look over things and to bat ideas off of and commiserate with.
Yeah, because it's also that team concept. So you and I work as a team, and then we bring our actual team, right?
Yeah.
And we're not saying that we have 40, 50 people that work with us, but we have a team bring the check boxes. We have estate attorneys. We have accountants. We have attorneys, a roofer, a guy. We're going to have Frank on here. We're going to have Frank on here in a couple of weeks. But like, you ask us for something, we kind of have it.
Another strong asset that we bring is definitely our professional network. I mean, let's face it, we're Delco guys. We're from the neighborhood. We both went to Bonner. We know a wide array of people. And me, I always say I like to do business with people I know, like, and trust. Right. So I like doing business in the neighborhood, and I like giving people the opportunity to get more business.
I just think it's the fact that I kind of know what I'm good at, and I think you know what you're good at, and we know what we don't do. Right. So we're going to go to those professionals in their niche or niche, however you like to say, and be like, hey, what are your thoughts here? Well, like if you're a client, you come to us and you're already working with an accountant, we're reaching out to that accountant.
Yep.
We want to make sure that either they want to become part of the team or what, maybe they're not doing their job. Like,
yeah. And that's the case many times, right? I like to be the financial coach. I always say that.
Mm-hmm.
I want to quarterback the team. I want to look out and say, like, all right, we're all working together. Then what are they doing for you? People got to realize when you have an accountant, a lawyer, a financial advisor, an insurance agent, a chiropractor, like a doctor, we're your team.
Mm-hmm.
We should all be talking together and know what's going on with kind of everything. You don't go making estate changes without telling your financial advisor. You know what I mean? But you see that often. And clients aren't getting that direction. So.
Or if like an estate lawyer, they name their beneficiaries a different way and you've never gone back and changed anything.
Yeah.
Or if you put a house in a trust and you don't know why you put the house in a trust.
Exactly. Exactly. So you're just revisiting things, making sure clients are aware of what's going on, why we have certain strategies in place and reminding them.
Yeah.
I think another great thing that we do is just follow up and just staying in touch with our clients and bringing that personal relationship to them.
Yeah.
I think clients, we don't have the time, inclination, or capacity to do this. They don't want to do this.
No, they want to go out and make money.
Yeah,
that's their job. Their job is to make their money. So
money or be retired.
Yeah, absolutely.
I think it's educating them on, hey, here's what we have going on, and reminding them of like where they stand and reviewing their financial plan with them, and bringing that personal touch and knowing that, hey, you can call us anytime. You're going to get us.
Yeah, and our plan for 2025 for you and I is more of the same, right? It's going out, maybe doing some more seminars. Like we'd like to go out and start hitting the people in different areas. I think we're going to do one in the beginning of February and kind of try to do one once a month. Maybe some different client events along the way we could throw in there,
Absolutely.
right?
Yeah, absolutely. I like your Fiji Now idea.
Yeah, we might have to do. We're definitely going to have to do that one.
Yeah, but it's been a great collaboration, if you will. I think we have some good ideas. We have a lot of energy behind us, and I think our clients are better off for it.
Well, you got 25 years in the business of being a certified financial planner. along the way. What are you seeing? What are we looking at 2025? Where are you in adjusting your clients right now?
I think we're still in an equity market. Markets have certainly been doing fantastic. Obviously, they can't run up forever, so we do it to protect some of those assets. There's still a lot of money on the sidelines, though. A lot of people are still sitting in cash. They feared that they missed a run up and was now a good time to get in because, oh my God, the market's going to drop any day now. And I don't see that. I always think, when should I invest? As much and as often as possible. You know what I mean?
Sure.
So you had that money on the sidelines, put it to work. Or talk to your bank even. I mean, get a CD.
Well, to that point, it's almost, actually, I was going to say about $2 trillion went into money markets and CDs just last year, because of where rates were. Well, now rates are creeping down.
Yep.
And we know what rates haven't creeped down in the fixed income products, right? Because they're managed by the insurance companies. Maybe a tick here or there, but they're staying where they are. So if people are still looking to get some of that cash besides just investing in the market into some kind of fixed income, those rates are still there.
A multi-year guaranteed annuity.
Yeah, absolutely.
Something like that.
Yeah. Or a short-term fixed annuity.
Yeah.
Right.
And just because your money's in the market doesn't mean you're taking all this risk. I mean, yes, we invest in stock market, but that just means we invest in the greatest companies of the U.S. and the world. The greatest companies of the U.S. and the world. That's what the stock market is. They're there to make money. That's what they do. So, we just diversify their portfolio and make sure that we're taking the appropriate risk for our clients. But you can certainly do better off than sitting with money under your mattress.
Yeah, well, now it's time to move it because it is sitting there, and it's probably at the year's time where it's up. So those are the types of conversations that you and I are trying to have with people. So if they want to reach out during that part, we would love to have those conversations.
Absolutely. So let me ask you a question. As far as I think your major specialty or one of the things that you're most focused on is long-term care. When you propose clients start looking at that?
Well, you would hope they try to look at it as early as possible, right? Because it's going to be cheaper for you to purchase, right? And it depends on if you're purchasing it through a business, if you're purchasing it for you and your wife or a spouse, it could be a partner. It just depends on where you are and what you're dealing with, right? People are going through those situations just coming off the holidays. You see it a lot during the holidays where they're taking care of one of their family members. And that's usually where the light bulb goes off.
Do you think people still have this misconception that a long-term care policy is just wasted money? They don't realize now that there's different aspects to it, like a death benefit for beneficiaries and things of that nature.
I think a lot of people are still they still use this old adage, at that time, just take me out and shoot me, right? And you can just laugh at that anymore. But,
sorry, I can't do that anymore.
Most people want to be taken care of at home. They see their parents they don't have a plan. And the best thing the parents could do right now is have a plan to say, hey, this is kind of where I want to be. This is how I want to be taken care of. And maybe you don't, I could pay you to do it, but, I don't want to put that burden on you. But by having a plan, you're not putting that burden on your kids.
Yeah. And maybe I will pay you to do it. And that's part of putting the money into the long-term care policy.
Absolutely.
Right? You could pay a family member to take care of it.
Yeah, it just depends on what type of policy you want and what's best for you. Right. So, maybe that age is early 50s is not the best time. If you're in your 40s and you can do it, I would do it in your 40s. 50s are where it's at. Most people we find are 60 and above when they really start thinking about it.
Yeah. I would think you feel not that I'm that old yet, but you start to feel like you can afford it.
Yeah.
And I don't think people realize hey, you can afford it. There's many plans out there.
There are.
And we could find, if you talk to an advisor, we can find something that fits your lifestyle.
It could be a traditional plan with a life insurance backer. It could be a hybrid plan. You have all different avenues to pursue here. It's not just it's not a one custom size fits all.
I think that's another great aspect that we bring to our clients is just with our collaboration and with our professional network, just different ideas that come to us that I don't think many people are utilizing. I think a lot of advisors and agents get stuck in their lane. And at least with us, we stay in our lane, but we bring others along with us to say hey, what else you got? What else can we do?
Absolutely. We're looking at, let's talk to the accountants and say, what are you talking to your clients about? Are you using defined benefits plans? Are you using strategies for,
right now I have a lot of pent up capital gains.
Yeah.
Right. I haven't been able to sell off. We have all these unrealized gains So now I got to work with the accountants and with Princeton to say like, hey, all right, how do we start mitigating this risk? How do we start lowering this? When do we start taking these gains off the table? Rather pay the taxes down, I know what it is. Sure, they're going to go up.
And getting back onto that point of, you say invest early and often, we see a lot of people that are in retirement date funds, right?
Yeah.
So, which is, hey, like I'm signing up for my job. I think I'm going to be at this company for 30 years. Is that always the best strategy?
Not always. It is an easy strategy, right? Like, hey, I'm just starting out. I'll just put in a 2050 fund. It's majority of equities, that's great. Sometimes I just feel like it's too diversified. It's like so many different positions, A target date fund is just a fund of funds. So you might have 10 Vanguard funds within the target date fund. That's pick on Vanguard, they're great, but whatever, Fidelity, whoever else. Instead of just saying, hey, maybe we put it in the S&P 500, and then when we grow a little bit, we add a little mid cap. And the other problem is that people don't pay attention then, right? It's just like sitting there, and they're not really monitoring it. They don't really know what they're invested in.
Right.
Whereas that's why I like working with Princeton Global, because we use the individual stocks, and then people know like, hey, I'm invested in that company. Many times people are like, oh, I'm in 2050 fund, and they literally have no idea who, what companies are actually invested in. So,
right.
And, they've come under a lot of fire these days. Just, the cost is certainly there, but the performance isn't always.
Right.
I'll just say it's something that you have to review. You can't just leave it alone. Because the other thing I hate is that people do that, they put half of it into the 2050 fund, let's say, and then they try to build their own portfolio with the other half of their money to see who's going to do better. You're not going to do better. I'm sorry. You're not going to do better than professional.
That is always a funny conversation when we have to do. But you will review clients' 401k statements. You'll look at their 403b statements. You'll give them some advice, even if you're not working with those dollars.
Oh, yeah, absolutely. Absolutely. Because at the end of the day, Murph, let's be honest. I want those assets, right? I want those assets to grow. So when I'm working with my clients when they're younger till retirement. So hopefully I'm working with clients. I have clients now that I've worked with for 20 years. I want those assets to grow over time so that when it comes and provide the best service that I can, right? Always be there.
Yeah.
So that when they go to retire, they're comfortable to say like, hey, you know what? You've helped me accumulate these funds. Why don't you take them over? Because I don't want to do it anymore.
Right.
So I certainly review. I tell my clients anything that affects their finances, you call me first. I don't care what it is. Anything.
Yeah, just have a question.
Yeah. Yeah. Like, hey, I need to put a new roof on. All right, great. Do you have somebody? How are you paying for it? Do you need a loan? Yeah. What's the best way to go about it? So like anything that affects them, yeah, certainly I'd like to be the first phone call.
Yeah, absolutely. Getting to new clients and those conversations that we're looking to have. That's the best part about kind of our process, I think. It's that conversation, right? We're not asking you, hey, bring all your stuff.
Yeah.
Right. I think that's kind of something that you and I came up with. And I was like, listen, I think this is kind of the way to go. We're not asking, hey, we don't need 5,000 pieces of paper the first time. It's kind of like a get to know you session.
Well, absolutely. Because, we got to interview them as much as they got to interview us. Right?
Yeah.
We want to know if we're compatible to work together.
I
don't want you to get overwhelmed with bringing things in. And I think you can speak to this. Like, don't you think that people feel like a lot of times like, oh, I can't afford that. I can't afford that.
Yeah.
I can't afford a financial advisor. I can't afford long-term care insurance. Like, have the conversation. Like, we're not here to push anything on you. Like, we're just going to give you some ideas.
Yeah.
There's been plenty of clients that we've spoken to that maybe we couldn't really do much for, but we pointed them in a direction to start getting their affairs in order. Maybe, hey, go see the accountant, go see the estate attorney first.
Yeah.
Come back to us in a year.
Yeah, because we're just looking to do good by the people we're having the conversations with, regardless if they work with us or not. And they don't always need your services or always need my services. So it's kind of like you can kind of pick and choose who's part of your team and who's not.
Absolutely. And then at some point in time, hey, maybe they do need the additional services.
Yeah.
But yeah, I think we offer kind of like a no pressure situation. Yeah, where we come in and just sit down and just talk.
Yeah.
Preferably in person.
Yeah. We like the person, or we do Zoom because we have clients in Florida, Georgia, South Carolina, different places, Arizona. But it also then, our process is the conversation, then we gather the data, then we kind of give our review of what it is.
Yeah.
So when you come in and actually sit down and meet with us, that's kind of the process. That's the process we're going through. That's really what it is.
Absolutely. And it does take a little work, right? Initially the conversation's easy. Yeah. It's tough for people to kind of commit, but once you have the conversation, I think that runs pretty smoothly. Once they decide to work with us, then it takes work on both ends. Right?
Yeah, absolutely.
We all have to do our part, and just be open and honest, and
and it's a continuation. Like, hey, try to get the plan in place, and then we're going to check in within the first 3 to 6 months. Be like, hey, this is what we're doing. How it going? Are you logged into your accounts? Can you get through? Are you seeing what's going on?
Oh, it's key. I mean, I have many new clients that we'll speak to 20 times in the first year, easily.
Yeah.
Just what about this? What about that? And then it just seems like dwindle off.
Yeah.
Just because they don't need as much, or they're more comfortable. They're more confident in the services that we provide. So I think that's good for them. I think they appreciate that.
Yeah. All right, Brent. Well, I think, that'll be it for today. We're going to have you on multiple more times on the Compass Conversation.
Always a pleasure.
Continue working together, and here's to a successful 2025.
I appreciate it. Thank you very much.
Have a great day.
Thank you for listening to the Compass Wealth Conversations podcast. Click the follow button to be notified when new episodes become available. Visit our website at www.mycfsi.com. That's www.mycfsi.com. Or give us a call at 610-449-9900. And don't forget to click the follow button to be notified when new episodes become available. The information covered and posted represents the views and opinions of the guests and does not necessarily represent the views or opinions of Compass Financial Solutions Incorporated. The content has been made available for informational and educational purposes only. The content is not intended to be a substitute for professional investing advice. Always seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your investment planning. Please note that the information provided in this podcast is for general informational purposes only. All opinions expressed by the hosts and guests are solely their own opinions and do not reflect the opinions of any institutions or entities they may be affiliated with. This podcast should not be considered as financial or tax advice. We strongly recommend consulting with a professional financial advisor or tax professional to get advice tailored to your specific situation before making any financial decisions.